In late 2020, New York Magazine described Sam Bankman-Fried as the presiding entity over a, quote, fledgling crypto empire. And it's true. At less than 30 years old, Sam has already founded several successful companies in the crypto space, namely crypto quant trading firm Alameda Research and crypto derivatives trading platform FTX. He has also become a major investor in a growing number of crypto projects and dabbles in DeFi. If you remember, he played a key role in the Sushi Swap saga last fall. But besides all of that, Sam Bankman-Fried is an effective altruist. Recently, finance magnates got the chance to sit down and talk with Sam Bankman-Fried. I'm Rachel McIntosh, and this is FMTV. Sam Bankman-Fried, welcome. So nice to have you on the Finance Magnates Blockchain Podcast.
Yeah, thanks for having me.
Yeah, definitely. So I know who you are, but for people who might not know who you are, can you talk a little bit about yourself and the work that you do?
Yeah, so, my name's Sam. I went to MIT, worked on Wall Street for 3 years after that, trading ETFs at Jane Street Capital. Really, really liked it there. Had sort of an exceptionally good experience. But in the end, felt like it was time to try building my own thing. So left in 2017 and got into crypto. So I started up Alameda Research, a crypto quant trading firm. And then in 2019, started up FTX, a crypto derivatives exchange, and have been, building that out ever since. And, I've dabbled in a number of other areas of crypto, including DeFi a bit. I guess, outside of work, mostly I work, but other than that, I'm into effective altruism and figuring out how we can have, how we can maximize our positive impact on the world.
Did you say effective altruism?
Yeah. So
Okay.
it's basically a sort of, I don't know, movement, collection of people, whatever you want to call it, that's sort of thinking about, how can you, if you want to try and figure out what options you have to do the most good for the world, what should you do? And so where it grew out of was like, if you have $100 and you're going to give it to charity, where should you give it? Like, which charity saves the most lives per dollar? And that was sort of like the most, straightforward application of it. But, it sort of generally has been, applied to just, I don't know, you have a life to live. How are you going to spend that life? What are you going to do? And what could you do that would have, the most impact?
I see. So how does that sort of philosophy come into your work in the crypto space? And I wonder also, is that something, that drew you to crypto in the first place? Is there an element of that there?
Yeah, I mean, shitcoin promotion mostly is right now. The real answer is earning to give. So it's, the thing that drew me here originally and what drew me to Wall Street as well was an opportunity to be able to maximize the amount that I could donate to charity. And so, if you think about what determines, and again, giving to charity is not the only way to do good. There are people doing a lot more good than I am working for some of these places. But, if that is how you're going to do it, you can sort of come at it from the angle of which charities are doing the most good per dollar. And also from the perspective of, what can you do to be able to give as much as you can.
Mm-hmm. Okay, that's so amazing. I mean, I don't think that I've met anybody in the crypto space who is sort of coming at it from that angle. I mean, is there sort of a community of people like you in crypto, or are you sort of unique? What do you think?
There's a few out there. There's not a ton. I think there's, there's a number who sort of have heard of it and are sympathetic to it and sort of appreciate it, but maybe wouldn't identify themselves as, I don't know, a member of it, but think positively of it. And then there's sort of a much smaller group of people who sort of are would consider themselves EAs and sort of have, in many cases that side of them actually predated the crypto side.
Mm-hmm. I see. So very super interesting stuff. And I also want to ask you a little bit more specifically about these projects that you're involved in building and that you've founded. So FTX, crypto derivative exchange that you founded. So can you talk a little bit about what is unique about this crypto derivatives exchange?
Yeah. And I think that the way that we really approached it at the beginning was, we've used these products before. We've thought about them a lot. We've interacted with them a lot. Um, what would we want to use? What would be the product that we would be most excited um, to be using ourselves? And then how can we build that for other people?
Mm-hmm.
And, um, we basically just found a lot of things that were really frustrating about the existing products. And we're sort of like, I don't know, we weren't sure whether to do it because it sort of felt like, geez, how the hell are we ever going to get users?
Mm-hmm.
I'd never built a consumer facing business before, but sort of felt like, fuck it, like, either we're going to try or not. And it kind of had enough upside that it seemed worth the shot. And so, some examples of those, I mean, some of it is just like not being dumb. This is something which the crypto space has cleaned up a little bit, but back in 2018,
Mm-hmm.
there was one exchange had upwards of $300 million of lost customer funds
That is so
because
crazy.
of an improper liquidation engine. And
Okay.
it's just like it was just a huge number. And what happened is basically every single week they claw back 10% of whatever earnings you had to compensate for the accounts that went beyond bankrupt. Um, and it was just, how'd you get there? Well, if you let someone put on $100 million futures position with $3 million of collateral,
Mm.
then markets start going down. You're not going to be able to close that position down before that account goes bankrupt. It's just like the impact of that position alone is going to blow it out. And
Mm-hmm.
just like a lot of bad parameters, like a lot of like, oh boy, like, yeah, of course you're going to have clawbacks. Like if that's the margin you require for that position size, people are going to be blowing out all over the place, and someone's going to have to be stuck holding that bag. And they technically had an insurance fund, but it would run dry, in the first hour of every week,
Oh
and
my
then it would
God.
be off to the user. So that was sort of like, I mean, that's a particularly egregious example, but there's still a
Mm-hmm.
lot of things that were not working so well. Another example is this, like, if you want to trade an EOS future on many platforms, um, how do you do that? Well, you go acquire spot EOS tokens, move them into your EOS futures wallet, and then you start trading EOS futures with it. And then you're like, okay, I'd like to trade an Ether future too. Well, you have to go buy some Ethereum, move it into your Ether futures wallet, and then trade that. You end up with like hundreds of wallets, each
Mm-hmm.
for a different future. If one position moves against you, you could get liquidated on your, EOS futures position. And it doesn't matter if you have a ton of extra collateral in all these other wallets, they don't help each other. And not only that, but they're all in different currencies. You can't even move your collateral between them. And so you end up playing this game of like managing all of your wallets on the same exchange,
Mm-hmm.
um, because every single trade that you're doing has like this own independent mini game. And this is what you get when you don't cross margin anything. And so on
Right.
FTX, what we said is like, we don't need to do this. Like, there's just a wallet, one wallet on FTX. You can put whatever you want in it. You can put dollars, you can put Bitcoins, Ethereum, whatever. We just total up the value of it. We're like, you have whatever, $2,000. Great. You can trade $50,000 of futures with that. And then you can trade any futures. And as long as, the total size of your futures position, divide by your total amount of assets in that wallet doesn't exceed, your maximum leverage, you're fine. And so, you don't have to manage multiple wallets. You can choose whatever collateral you want. You can trade whatever futures you want. And it's like, it gets rid of this entire complex web of things that you had to do to even be able to trade and not get randomly liquidated.
Mm-hmm.
And so that's sort of like another thing, which is like, taking a system that was really needlessly complex for users and capital inefficient and awkward and expensive, and trying to transform into something which is ideally simultaneously powerful and flexible,
Mm-hmm.
but also like simple and clean to understand. Um, and the ways you do that are identifying places where there's complicated barriers, which are both like making things messy and also making them bad at the same time. And those are the best things to get rid of. Sometimes you have to choose, right? Sometimes there's like this complicated thing which adds flexibility for the user, and you're like, all right,
Mm-hmm.
like they sort of like, it's a more powerful product if we have it, but it makes it more complicated. Is that worth it? I don't know. I mean, sometimes it is, sometimes it isn't. But
Mm-hmm.
anytime you can find a thing that's making a product worse and more complicated, you know, anything you can do to get rid of that is super valuable.
Right. And when you explain it that way, I mean, it really does just sound like just not being dumb, as you said earlier. Like,
Exactly. And
yeah,
it's like,
yeah.
there are some things that we've done that I think were really clever, but I don't think those are the most important things we did. I
Okay.
think the most important things we did was just like 200 individual decisions put together. In each case, we're like, this is kind of dumb. What if we did it this other way instead, which seems more intuitive to us?
Mm.
And there's sort of this question of like, I don't know, are we missing something? Like maybe there's this rain dance, and if you don't do the rain dance, like your platform just won't work. And like we were going to be sacrilegious. We weren't going to be doing the rain dance. And we're so proud of ourselves, and our platform just falls over. That's sort of a worry. And I mean, I'm using sort of like weird words to describe it because like we didn't know how to be any less vague than that because we didn't know. Like the whole worry was that there was something we didn't know, something we were missing about this
Mm-hmm.
that that explained why these other products were so complicated. Because we're like the thing was like it's hard for us just to say yeah they're all stupid because like how these are like giant companies making $1 billion like I don't know you don't want to just like write off all of that as
Yeah, right.
noise and so I think that was like one of the central things when we were starting FTX that we had to resolve was like, what is it? Like, is it that, yes, they're all being dumb and we can just build a better product by doing common sense things and being careful? Or is it like, no, there's a method to this madness. It makes no sense from the outside. But once we're on the inside, boy, will we realize why our ideas
Mm.
were not good. And I think that's sort of one of the two crucial questions for FTX. The other just being like, can we ever get anyone to know about it? Like, the product doesn't matter if no one uses it. And I think to the first one, we did resolve it in the end. I think I now sort of like have a sense of the answer. And it was a dumb one. And and yeah, I mean, it's just like the answer to what we were missing is nothing.
Mhm.
That's just like it was. I don't know, it was what it looked like. And then you ask like, how can that be? Like, okay, sure, but like, I don't know, this company made a lot more than I did. Like, who am I? Like, who am I to say,
Right.
that like, right? It's sort of like, you shit on Goldman all you want. They're making like, I don't know. Would you give your, career for having started Goldman? Probably, right? Like
Yeah.
clearly they did something good. But I think that gets to one of the things they did that was really good was starting a crypto exchange in 2014. Amazing business
Mhm.
decision.
Mhm.
Get all the customers when it's easy to get them. Industry booms, and you're just amazingly well off and in a great position, and
Right.
that can compensate for a lot of other things. And it also decreases the evolutionary selection pressure on the product.
Right. You get that first mover advantage.
Yeah.
Yeah. Yeah. So has that philosophy of sort of, quote unquote, not being dumb or just looking for simpler, better solutions, has that also transferred into your work with Alameda?
Yeah. I think the basic answer is sort of yes, but a variant on it.
Okay.
Um, and, and so again, it's like, I don't know. I think there's sort of this thought that like when you do the quant trading, your brain gets huge and you think of things that mortals cannot even fathom.
That's
And it's
that's
like,
certainly
oh,
what it
you
feels
guys
like to
are
me. Yeah. Yeah.
right. It's sort of like, oh boy, they must have their supercomputers and their geniuses work, whatever. I mean, that's sort of like the sense you get from how it's talked about.
Yeah.
And um and in that might be true eventually.
Okay.
It's like there's sort of these people running complex, machine learning models, trying to actually have sophisticated AIs trading on markets, and each year they get closer to making money. Each year they lose less money.
Hmm.
At some point they're going to become pretty good, but the real answer, at least so far, has been, here's like I don't know, best trade I ever saw. Um, in late 2018, late 2017, sorry, early 2018.
Hmm.
Um, in Japan, Bitcoins were trading about 10% to 20% higher than they were in the United States.
Hmm.
So, it'd be a $10,000 Bitcoin in the United States and $11,000 Bitcoin in Japan.
Hmm.
And, and the sort of like naive person, and is $1 billion of volume, on both sides each day. And the sort of like naive person might say, oh, well, like, I don't know, obviously this can't actually be the trade, because it's got to be harder than that. But like the trade seems like you send, I don't know, $10,000 to Coinbase, you buy a Bitcoin, you send it to a Japanese exchange, sell it for $11,000, send the dollars back, and now you made $1,000. And like, you know, is that, like, it can't be the trade, because that's not, like, I don't know, that's sort of like not explaining how other people weren't doing it, or how it could exist, or like also it's like not how quants make money. And so, and in fact, it's like a good prior whenever you see something like this, to be very skeptical, right? Just like free money doesn't usually land on the ground. If you think you see it, probably you're missing something.
Right.
And the answer in crypto in particular, but honestly in a lot of places in quant trading, is that it's the mystique really overstates some parts of it.
Okay.
And the truth is, yes, that was the trade. The core trade was you buy a Bitcoin in the United States, you sell it to Japan, you sell it there, and you make 10%. That was a trade. There's nothing more to understanding how there was money to be made than that. It wasn't like advanced mathematics. It's literally like 11,000 is bigger than 10,000. I see an arbitrage, I'm going to do it. And so then how can that be, or what was really going on? The answer is that you get to the logistics. Like, I don't know, I was sort of brushing off a lot of steps of this, like bank accounts.
Right.
So, you know, what actually happens here is, it's basically like that, well, you're starting with dollars in, you know, whatever, your Bank of America account, right? In the United States. And what you do next, you try and wire it, I guess, to Coinbase, right? And already you have a problem, because Bank of America doesn't want to deal with crypto companies.
Right.
They do not want to deal with that, like, regulatory burden. So they will just shut down your account. Like, they'll say, sorry, you can't use your bank account anymore. You know, we'll mail you a check for all the funds in it. Okay, so you got to step one and you just lost your bank account and you can never do it again. So, okay, so you've hit hurdle one and somehow you have to solve that problem. Now you get the money to Coinbase somehow, and you realize you buy your Bitcoin, you realize you have $1,000 a day of withdrawal limits. So you can't do this trade for bigger than $1,000. And so now, and there's a 3-month long support ticket line in Coinbase because it's completely overwhelmed. So, okay, so now you have to solve that problem somehow and get withdrawal limits that will let you do this. Now you move on to step 3. Okay, you finally send these Bitcoins over to a Japanese exchange. And you realize, oh God, in order to use this Japanese exchange, I need to be Japanese. I need to be a Japanese resident. And of course, I need to be a US resident at the beginning. And now I'm also a Japanese resident. That's sort of interesting. So, okay, so now somehow you become, you imbue yourself with Japanese residency or something. And now it's time you generate Japanese yen on the other side, right?
Right.
And now, oh God, you need a Japanese bank account and you need to be a resident for that too. So you get a Japanese bank account and then they shut down your bank account because of crypto. And you're trying to explain, but also you don't speak Japanese, so you're not having a lot of luck. And okay, fine. Finally, you get the you know, whatever, you get the yen over there. And then you got to get it back to America and turn it into dollars somehow. And here you are explaining to this in broken Japanese, this rural Japanese bank, how yes, this is the 7th day in a row that I would like to send dollars in the same direction across countries to a differently named entity in a different currency. And no, I'm not money laundering.
Right.
And they're like, this, like, we've never seen someone trip more flags at once. Like, yes, you're only wiring in one direction every day. And it's like more money than you could possibly have. Like, what's going on? And the other side are like, no, it's arbitrage. You see, there's like, and we've lost them already, right? And it's
right.
banker. So, okay, so like, there's all these things that stop you from being able to just do this. And okay, then once you've done that, what's next? Well, it's, you know, I don't know. Let's say you put all this together. you have $1,000 and you're like, great, I'm making $100 a day. That's pretty cool.
Mm-hmm.
But also I spent like, you know,
A year trying to figure this out.
exactly.
Yeah.
And you realize you never remember to raise money. And so now you have to do that, and you're going around, and you're sort of like, all right, guys, I'd like to raise money for my crypto fund, and they're like, please tell me more about it. And like, well, we're all doing all this Bitcoin stuff, and people are like, oh God, that sounds kind of risky and scary. Can I trust it? Like, don't worry, can't lose. It's arbitrage. And they're like, yeah, I've heard that one before, right?
Mm-hmm.
And they're like, okay, well, we give you a little bit how much you need. I'm like, well, trading $1 billion a day on both sides, and it's 10% a day returns. And so could I have like $100 million? And like, to be clear, you found this one weird trick to make 10% per day interest, and you want me to wire you $100 million? Like, that's obviously, like, I'm obviously never gonna see this money again. Like, it's like, you went too far. You should have made it more plausible. You know? And so, you know, okay, fine. Somehow you convince someone that it's real, and you put that piece into place, right? And then what? Then you make a lot of money.
When you finally get to that point, yes.
When you finally get to that point, it just fucking works.
Right.
And it works exactly as you think it does, and it makes exactly as much money as you think, which is to say, if you successfully checked off all the boxes, including getting a shit ton of money on little notice, it makes a whole lot. Like, it's an absurdly good trade, like the best trade I've ever seen. And so the real thing going on here is, it's not that you have to be a genius to understand the trade. The trade was just like, here's a $10,000 Bitcoin, here's an $11,000 Bitcoin. What if I buy one and sell the other? But you all of a sudden had to put together this incredibly sophisticated global corporate framework in order to be able to actually do this trade. And that was the real task. That was the real hard part. And it is hard, and very few people get to the end of that. And I think that's like, I mean, that's particularly true of crypto, which is like a super messy place in general to do things compared to the normal financial ecosystem. But even so, you know, people really overestimate the importance of, you know, what they think must be like complex mathematics in these things. And they underestimate the importance of like figuring out a lot of complex systems and logistics, figuring out what you have to do, working them correctly, making a ton of random good judgment calls, and in the end, hopefully emerging with the right system.
Damn. I mean, that just kind of blew my mind. I'm not going to lie. But I think that's so important. I mean, you know, that's something that maybe a lot of people are sort of turned off, you know, the whole crypto ecosystem by, is that it seems from the outside like it's all this complex mathematics and, you know, software development and programming. But you're right. It isn't necessarily all about that. A lot of the most complex problems are just systemic and logistical.
Exactly. And it's like, you know, our sort of like senior executives at this point were spending a collective like 5 man hours a day sitting in banks, like physically in bank branches every single day.
Oh my
and
God.
Why is this? Well, we had to do the wire transfers, and it was above the daily wire transfer limit for online transfers for our account by like a factor of 10. And so what do? Do you like give up? No, you go and you stand in the bank and you watch while the tellers manually type in these reference codes. And, you know, sure, you do what you got to do. You know, that turned out to be an important step of this. And so, you know, I think that's just like a really important part of probably of most businesses, but, you know, including even ones where you wouldn't think so. You know, it's just like generally grinding away, making good decisions, having the right vision, knowing where you're trying to go, building what you need to build, doing a good job of executing, and then, you know, hopefully reaping the rewards for it.
Yeah, exactly. So I want to switch gears a little bit and ask you about the work that you've been doing, or sort of what you've been up to in the DeFi space.
Yeah.
So yeah, this is no longer news. This is long in the past. But the thing that sort of first called my attention to you was this Sushi Swap saga, where you sort of like jumped in and saved the day. So can you talk a little bit, you know, sort of about what has followed that experience? You know, what has sort of the DeFi ecosystem as a whole like maybe learned from that particular event?
Yeah. So, the context for people who don't know is a weird situation.
Mm-hmm.
There was this protocol came out of nowhere, Sushi Swap, all of a sudden became extremely popular over the course of a few weeks. Became, the most talked about project maybe in all of crypto. Skyrocketed to $1 billion valuation. Everything was great. And then right at sort of like a crucial moment of its sort of coming of age story, one of the founders of it, I never know what the right words to use are here, but
yeah,
there was this fund
mm-hmm.
associated with the project, and he took the fund. And you could describe this fund as the developer fund is maybe a thing it had been described as,
Mm-hmm.
but this gets to the heart of some of what happened, which is that no one was really clear on exactly what this fund was. And everyone but this guy thought definitely this guy couldn't just take it.
Mm.
This guy's like, well, I'm the chief developer. This is the developer fund. I built this project. I don't seem like a reasonable person for it. And everyone else was like, no, that's obviously not what anyone was expecting.
Yeah.
And it was, anyway, whatever, this is not good for the project. This caused a huge catastrophe and basically it's like a total crisis of faith. And no one would trust the project anymore.
Yeah.
And so anyway, this guy, Nomi, as he was anonymously, or they were anonymously known. I don't know for sure it's a guy.
Mm-hmm.
Then eventually kind of gave up, running the project and just tweeted that he was going to hand off the keys to me.
Yes.
And I was napping at the time in the office, and that's sort of a surprising thing to wake up to. I mean, it's sort of like, there go whatever plans I had.
Uh-huh. Yeah, true. I didn't think about that part of it.
So anyway, spent the next couple of weeks basically shepherding it through what it needed to get through. It was like this wasn't just sort of like a random period. This is a period where it was going to be launching its core product. And so, shepherding it through that process and the associated things, and then, putting together a vote for, an actual governance system for it going forward, so that I could, kind of take my hands off the wheel.
Mm-hmm.
And so I think, that's sort of like the backstory there. And, it's, the project went from the most popular in crypto probably to the most hated in crypto in about an hour.
Yes.
And then there's a question like, oh, well, then he gave up control and in fact later gave back the funds that he had taken. And so then did that fix things? And the answer is no. The answer was it was still very unpopular. The damage had been done, and crucially, like the token price had gone down a lot.
Yes.
And even people who forgave the original sin were now pissed that caused the token price to go down, if nothing else. And so anyway, it's like, I don't know, bad things often beget bad things, and this was certainly one of them. And so anyway, it was dark times for Sushi, and it went through this like multiple month-long period where it was, had just a really bad reputation.
Yeah.
It was sort of not quite the laughing stock of crypto, but like, I don't know, not that far away from that. Like,
yeah.
It was sort of like held up as an example of like,
how bullshit DeFi is or something like that.
Exactly.
Yeah.
Yeah. And so that was, I think what a lot of people felt like that was going to be the story of Sushi in the end.
Mm-hmm.
And that didn't turn out to be the story of Sushi in the end. It now is once again one of the most popular projects in crypto. And I think it's really interesting what happened to get from there to here. Because basically it wasn't that like anything surprising happened really. It was that a lot of things that had been true the whole time became much more obvious.
Mm-hmm.
And so, basically, first of all, this whole time during its darkest period, the core developer team had just been building. They've just been building more and more features, and not worrying about the FUD, not worrying about what everyone was saying. They're just, whatever, rolling out products as you sort of want them to be doing. And eventually people sort of realize that, like, oh, wow, Sushi's actually rolled out a ton. It's actually been like maybe the most productive project in DeFi. That's pretty cool. And that was one of the things that people it finally like came to people's attention, sort of, that had been happening. And that was one thing, but why then? There's another thing that happened at the same time, and probably triggered a lot of this, which was its biggest competitor, Uniswap, had been incentivizing people to use its protocol. And then it stopped, as had been scheduled for a while. And not surprisingly, the day it stopped, a lot of people stopped using Uniswap because they're no longer being paid to. And in fact, not surprisingly, a lot of those switched to SushiSwap, which was still incentivizing it. And so now all of a sudden, overnight, a lot of the assets switched from Uniswap to SushiSwap. And all of a sudden, SushiSwap, which had been slowly dying off, it looked like, for months, like tripled in every metric.
Right.
And it went from dying off to as big as Uniswap overnight, which had been sort of the most popular project. And so that just changed the narrative. Everyone sort of saw that and they're like, oh, wow, SushiSwap's coming back. and it was, but also you could have predicted that. I mean, it wasn't, everyone knew rewards were going to end. Like, I don't know what people thought was going to happen. I guess not that. I don't know. But right, so it happened. And now all of a sudden it's making a huge comeback. And it's popular again. People like it. It's now cool. So all the cool kids like, and that's that started dovetailing with things. And then people like, oh, is this project actually good? And like, oh, wow, it's actually built a lot of cool stuff. That's cool. Yeah, and like, in the same way that there's been this like negative feedback loop before, where bad things happened, which caused people to just think other bad things. Now all of a sudden, good things happened, which caused other people to reconsider and sort of think more positively about a lot of aspects of it. It had been a while since the Nomi incident. People had basically forgotten about it. And then all of a sudden, overnight, Sushi's reputation became good again. And, I think it's like partially just that the market can be silly. People have short memories. Partially that, and I think it's a key part of this, that like, you can do things that will really hamper your growth basically forever. And the Nomi incident did, and it was quite bad. But also, things can at least partially just turn around on a dime if you play your cards right. And I think that, like, to the extent that there is sort of a lesson from the Sushi team here, it's that they just kept doing straightforwardly good things the whole time. And like, yeah, sort of everything sucked. So be it. They're just going to keep making the product better, because that's all you can do.
Right.
And, if you do that, you do what you can, and it puts you in the best place to succeed given the circumstances. And sometimes it's not enough, and sometimes it is, but it's the right thing to do, and it's worth a shot. And so that was sort of, I think, one of the biggest lessons of how SushiSwap got its redemption.
That's amazing. And again, like, I love the way that you sort of described, like, that they at the end of the day, like, the team just sort of buckled down and kept doing good work, and eventually that paid off. And it's like, again, this sort of narrative that it's just like the simplest possible answer is once again the correct one. Yeah,
it's not the only thing that matters, but yeah, half of all of that matters is, like, I don't know, they like ignored the FUD and built a good product, and that mattered, and other things mattered too, but that mattered a lot, and that ended up being half of what saved them.
Exactly. So what are you the most excited about, sort of at the moment, either in DeFi or just sort of crypto more generally? What gets you going?
Yeah. So, it's the things that I've been thinking about the most recently, I guess. There's a bunch of things going on, but maybe two of them. So one of them in DeFi is basically scaling DeFi, building DeFi that could potentially become really awesome and service hundreds of millions of users.
Mm-hmm.
And I think that has to be your goal if you want to be ambitious. Like that, me not saying that you want to get there tomorrow or that you think it's realistic to get there tomorrow, but that, that's sort of the ultimate win condition in some sense. If you think it's at all plausible. And I think DeFi is super cool and has a lot to offer. And so it could happen, not say it will.
Mm-hmm.
And then, what you do to get there. And so I've spent, most of my time in DeFi building out Serum. And basically the shtick behind Serum is, try and find all the pieces necessary to build a huge, powerful, composing DeFi ecosystem, and then start building them or incentivizing them or doing whatever it takes, and see how far you can get.
Mm-hmm.
And so part of this is identifying the blockchain that can actually support this. And I think Solana is the best guess at that. That's what we've been building. And part of this is building the base products that will allow other people to build on it. The base tooling, the base primitives, the kind of core stuff that everything else relies on. And then part of it is working with people to bring their projects onto the ecosystem. So that's what I've been doing on the DeFi side. And I think the thing that I think most strongly there is is that, if you just sort of think through some of the constraints here, some of them are way harder than others. Mm-hmm. And, one of these is if you want to have a DeFi ecosystem that 100 million people use, how many transactions per second does your blockchain need to have? And it's not exactly clear, but you can ballpark it, right? You can look at products that have that many users. Mm-hmm. You can look at Twitter, you can look at Facebook, New York Stock Exchange, and whatever you want. Look sort of the biggest products in the world, mm-hmm. and just say I don't know, how many transactions do they have a second? How many does Visa have? Mm-hmm. And you get pretty consistent numbers, somewhere between 10,000 and 1 million is sort of the ballpark range.
Right.
And okay, so that's where you need to get. And then I think the thing that I think a lot of people miss is if that's where you need to get, if you're not going to get close to that, you're just fucked, and nothing can compensate for that.
Right.
It's not oh yeah, we don't have close to that, but there's no but. It's mm-hmm. And I think the big thing here is the ETH 1.0 DeFi has 10 transactions per second for mm-hmm. the entire network. And that's, it's just 5 orders of magnitude too low. And again, I think it's just one of these things where to some extent, just nothing else matters. Mm-hmm. That's just, it's fatal. And it's never not going to be fatal. Mm-hmm. And so I think, one big thing here is just that can't be the answer. And it doesn't matter what other virtues it has. They're sort of irrelevant if it's going to be literally 10,000 times too small. Mm-hmm. And so the answer either has to be a way to scale Ethereum, or it has to be a different blockchain. And I think everyone sort of accepts that it is important to scale and that these scaling solutions matter. But I think they more than matter. I think it's sort of that's the whole fucking thing. And without that, you're lost, and there's no point. And mm-hmm. and so rather than deciding on other metrics and then figuring out how to scale, I think you just have to first decide how to scale, and then fit everything else around that, because tooling is hard to build, but you can do it. Mm-hmm. Communities are really hard to build. You can theoretically do it. Turning the number 10 into 10,000 is not going to happen. It's just and so you have to understand what constraints you have control over and what you don't. Mm-hmm. And that's a lot of where Serum is coming from too. Is just thinking what are going to be the hardest pieces of this, and what do we need to do to get there, and then let's do those things and fit everything else around that. So in DeFi, I think that's sort of the set of things that I've been focusing on the most.
Right. Right.
And then in outside of DeFi, this changes over time, but recently, I've been thinking a lot about the things that FTX is not good at or hasn't been good at. And I think it's really important to think a lot about the things you are good at. And because you don't want to get 1,000 from it when you could get 1,000,000. I don't know what the units are, but really often, like, a lot of doing a good job is identifying the things you're great at and maximizing those, really wringing everything you can about it, because you sometimes just like super linear payoff curves. You just like have these huge potential wins, and you want to get there. You definitely don't want to not bother getting the giant easier wins. But there's a little bit of a fortunate situation where FTX is in a position that it is growing at the things it's good at, and it's going to keep doing that. And it's set up in a really good way to do that. And so sort of have the luxury to some extent of letting that happen and continuing to work on it. But but the good news is that I do think it's pretty likely, if we do a good job, that will continue to happen. And what that is FTX's core strength has always been being a sophisticated trading platform for the most engaged people in crypto. And so, what is it? It's a platform where if you spend 6 hours a day trading crypto, like, it's made for you,
Okay.
And it's like massively more powerful, has way more features. It's way more intuitive. And it's growing quicker. We put a lot of time into being, responsive to our users. We listen to what features they want and try and roll those out. And that's been our strength. And the weakness is we weren't founded in 2014. We don't have 40 million users the way Coinbase does, and we don't exactly know how to get them,
Okay.
And so that's not an easy problem. And then to go along with that, maybe, I don't know, unclear exactly which way causation goes here, but FTX platform was also designed, for the heaviest traders, and that's what it's optimized for. And so, there are a lot of UI decisions that we made that they weren't terrible for everyone, but they're just, on the more complex side,
right?
And not what you would use for someone who is trying to trade Bitcoin for the first time in their life. And so, those combined together to make it doubly the case that that FTX's strength has been highly engaged, high volume users, and its weakness historically has been the long tail of retail users.
Right.
And so we've spent a lot of time thinking about over the last 6 months or so on the FTX side has been what can we do about that? Because we're going to keep growing out our core user base. That's super important, but I want to do more than that. I don't want to sort of sacrifice. I think we have a lot to offer to the others, and I think they have a lot to offer to us. And I don't want to sacrifice that because it's not what we know how to do. And so, we have a lot of ideas. We'll see if they work. But, part of this is what products do we need to make? And products could be whole new markets, or it could just be UIs for displaying the markets, or it could be mobile apps or whatever it is. And then the other part of this is how do we reach those users? Like, what do we need to do to go from, targeting the 5,000 most important users to the platform and reaching out to them to somehow getting 20 million users to know about us and sign up. And so those have been sort of the two challenges that I've spent probably the most time focusing on over the last 6 months.
Okay, I see. Well, I have a strong feeling that you're going to be able to do whatever you set your mind to, Sam.
I hope so.
Yes. Anyway, Sam, I want to thank you so much for your time. Genuine pleasure to speak with you, and I'm really excited to see what happens next, what you're up to next. So, can you have an open invitation to come back and on the show anytime you want?
All right. I might just take you up on that. So.
All right. Yeah, please do. Okay. Before we go, do you have any announcements you'd like to share, or can you tell our listeners where they might be able to find out more about FTX or you or anything you're involved in?
Yeah, for me, Twitter's probably the best. It's where I'm the most active. I waste way too much of my life there, so might as well make it more useful. I'm SVF_Alameda there. Or you can go to ftx.com, see what we have there. I mean, boy, there's a lot of things I want to announce, but they're either old news or not quite news yet.
Okay.
So I think, maybe what I'll say is that there's, one or two products that I've been really, really excited for a while. And, fingers crossed, all goes well. We may be able to go live with those for users next week. And so really excited for that. And hopefully people like it. Hopefully it's a good experience.
Okay, fabulous. Thank you so much, Sam.
Thank you.
For more news, events, and podcasts like this one, visit financemagnates.com. Thanks for listening.